Next, we have an exciting session called Consumption Theme Holds Strong Despite Economic Headwinds. And to moderate this discussion, it gives me great pleasure to welcome on stage the Managing Director for DSG Consumer Partners. Let's welcome Deepak Shahdadpuri. Thank you so much for joining us here, Deepak. And joining Deepak on stage, we also have Rohit Agarwal, Principal Sequoia Southeast Asia, and also Jin Oh, Partner Goodwater Capital. And they'll be joined by Edward Tirtanata, CEO and co-founder Kopi Kenangan, and also Rama Supata, co-founder Saturdays. And finally, rounding up this panel, we have Ahmad El-Khatari, founder and CEO Hypefast. Thank you so much for joining us, gentlemen. Deepak and our esteemed panelists, over to you.
Test.
Okay. Good afternoon, everyone, and thank you to the panel. When I landed in Jakarta yesterday, I wasn't expecting so many people and so much energy in the room. The theme for this panel is consumption theme holds strong despite economic headwinds. And a couple of people came up to me prior to the session saying, Deepak, based on the energy and the number of people, what economic headwinds? You know, Indonesia has everything going for it. If you guys saw the World Bank's latest GDP forecast reports, it's revised GDP growth for the globally down sharply on Tuesday from 3.1% to 1.6%. And the one country that stands out and the second fastest growing country in the world in terms of forecast is Indonesia at 4.8% this year and 4.9% in 2024. So we got a fantastic panel. We've got 2 investors, 3 founders. Given the diversity and the global nature of the people in the room, I'm going to ask each one of them to spend 1 minute to introduce themselves and the company or the firm they work with before we dive into the theme. Rohit, let's start with you.
Thank you, Deepak, and a very happy new year to everyone here. I am Rohit. I'm part of the investment team at Sequoia Capital, based out of Singapore. We are a multi-stage fund. We partner with founders from the seed stage all the way to growth stage. We're investing cross sectors and have been partners to founders in Southeast Asia for now coming close to a decade. Thank you.
Hi, everyone. Very glad to be here. My name is Jin Oh. I'm a partner at Goodwater Capital. We're actually a fund based out of Silicon Valley. I'm the only partner out here in Asia. So we're really expanding our Asia practice. Currently, we're managing around 5 billion in AUM, but we're investing across all stages. And so we just see so much potential, particularly in the Asia market. And so we've just been focusing a lot here. So really glad to be here.
Hi, everyone. My name is Edward Tirtanata. I am the CEO and co-founder of Kopi Kenangan, which is Indonesia's first new retail F&B unicorn. And we run a network of coffee chain, new retail coffee chain of around 850 stores, extending in 67 different cities of Indonesia and one more city in Malaysia, Kuala Lumpur. We also run an FMCG division as well, in which within 1 year of launching, we are the 3rd largest bottled coffee player in Indonesia. So as opposed to like 3 years ago, where we are only doing coffee chain in Indonesia, right now we have expanded beyond Indonesia. We envision to become a pan-ASEAN new retail coffee chain with a strong position inside the FMCG industry inside Indonesia as well.
Good afternoon, everyone, and Happy New Year. My name is Rama Suparta. I'm the co-founder of Saturdays. So Saturdays is tech-enabled retail that provide designer quality yet affordable eyewear. So we design in-house to making sure that look and fit good for the Indonesian consumers. So we provide omnichannel experience. We sell through app, website, home try-on, as well as lifestyle stores. Right now, we have about 40 stores in 9 cities across Indonesia.
Thanks for having me. Hi, everyone. I'm Mad. From HiFest, we're building house of brands. Basically, like, the idea is building the next P&G Unilevers, but we're a big believer of, like, local brands in the market. We believe that, like, we can actually build 100 million EBITDA businesses, like, just from local brands here in the markets, and by partnering with them, those who actually, like, pass the product market fits, then, like, get together with them to kind of, scale them to the next level. Yeah.
Thank you, everyone. How I'm going to run the panel is to give you two perspectives, the investor perspective and the founder perspective on two underlying themes. Underlying theme number one, are there and are we seeing economic headwinds in Indonesia? And number two, why despite the economic headwinds, consumers are still spending, and why investors like us are investing in consumer businesses, and why founders continue to build Indonesian brands for the Indonesian consumer. So just in terms of backdrop, the last 2 years has been very tough. As we exited 2022, interest rates have more than trebled for the borrower in many markets. Inflation is very sticky. If you read many of the analyst reports from the big banks or the research houses, many analysts are predicting a sort of a easing conditions as we come to H2. But I'm less sanguine. I mean, the transition in energy, the sticky inflation, the transfer of sort of assets from the asset owners to labor is going to play through the year. So with that in mind, and the headwinds which are receding but are not going away, can I ask Rohit, from an investor's perspective, how does Sequoia think about the headwinds and therefore your strategy within the consumption space?
Yeah, Deepak, most of our investing and partnering with founders starts in the very early years of their journey. So today, if we're meeting founders at the seed stage or at the Series A stages, it obviously sort of weighs on our mind what they're building and how the macroeconomic climate and the headwinds or the tailwinds support or sort of not support that trend. But the reality is that we're investing for a very long period of time. The usual timeline of when we partner with companies and when they grow up and when our exits show up is 8 to 10 years. So whatever we are investing in today will hopefully have the benefit of market cycles across the macroeconomic climate, both that is existing today and...
But has Sequoia's playbook in any way, in the short term, I know long term it's intact, is the economic headwinds, the inflation, the interest rates, question about employment rate impacting how and when you invest, or you guys are just keeping to your playbook and not trying to time the market?
I think we are not trying to time the market, and I'll maybe share a couple of examples. We partnered with two companies in the aftermath of 2008 financial crisis. One of them was Airbnb, where we were seed investors from our US funds, and the other was Stripe. And over the next 15 years, these companies have grown on and probably proved all estimates that might have prevailed at that time on their TAM as well as their own trajectory to be wrong. And we hope that the best founders in Indonesia and Southeast Asia will have similar trajectories. They will start out, and we think these are great vintages, by the way, for building companies, because founders make much more capital efficient choices in markets like these when sort of the free money or the easy money is out of the door. The founders come back to concentrating on the basics and focusing a lot more on organic growth. So if anything, we see this as a window of opportunity for long-term committed capital to invest and partner with the very best founders at across stages in Indonesia and in Southeast Asia.
Thank you, Rohit. Jin, before coming to you, I want to just get the founder perspective. Edward, you run one of the fastest growing consumer brands in Indonesia. You speak to consumers thousands of times a day. How are you seeing the headwinds in terms of inflation, interest rates, cost basis must be going up. So how have you sort of changed your business model, increased prices, and how has that increase in prices, which I'm assuming may or may not be accurate, but based on the commodities you deal with, you have to see it. How has that impacted your pricing to consumers and their willingness to accept price increases in this environment?
So maybe before I answer that question, in the spirit of New Year, right? I would like to really summarize 2022, right? I think a couple of weeks ago, I received an email from Morgan Stanley where they really characterized 2022 as the great normalization, right? Because we just came out of a sky-high valuation, right? And then due to the increasing interest rate, S&P is down by 20%, bond I think is down by 13%, which is the first time it happened in 150 years, right? So it's pretty much gloom and doom, right? For lack of a better word, in terms of the investment side. However, the theme of great normalization in 2022 does not just apply to the investment side, but then it applies to the consumption side as well. Because if we think about it, in 2020 and 2021, we were really ravaged by COVID, right? In 2019, we were a profitable company, but then 2020, as COVID hits, it becomes it becomes a lot harder for a consumer goods company to be profitable. Why? Because there is a lack of footfall traffic, right? In order for a business, or at least for an omni-channel business like Kopi Kenangan to be a profitable company, it is very important that there is footfall. That's why we can be here today. That's why we can have a chat inside a ballroom instead of a Zoom meeting room, right? That's why if you go to malls, if you go to offices, it's full again. That's why Kopi Kenangan can expand to Malaysia, can continue their international expansion, because COVID is finally, I hope, is behind us, right? So that is why with this change in consumer behavior, despite the obvious headwind, which is inflation, we are actually becoming more and more profitable, right? Because back then, during COVID, 70% of our revenue comes from third party. And any revenue that comes from third party, there must be costs associated with it, right? And typically it ranges between 20 to 30%. So, just doing a simple math, right? From a GP margin of 70%, you need to reduce that by 20 to 30%. So, even though there is inflation in 2022, actually our GP margin as a company increased by 15%. And that is because the source of our revenue changes from 70% third party to 70% our in-house revenue coming from both our app and walk-in channel, right? So that is why I think, for a consumer brand like myself, Hypefast and Saturdays, right? We do see, an increase in GP margin because the channel changes. And of course, raw materials increases, but that is somewhat mitigated by this shift in consumption behavior in Indonesia and I assume beyond as well.
Let me ask you this. The normalization is playing out. Here we are in January, looking 12 months out, knowing what you know, which is what all of us know. Are you concerned that Indonesian consumers will sort of pull back spending, spend less, and therefore you need to sort of think differently in how you go to the market? Or do you still feel that 2023 will still see very buoyant consumer appetite given the uncertainty in the economy in the short term?
Okay. In my opinion, in the next 12 months, right, there will be quite a lot of change in terms of online revenue, right? And mainly because we were just speaking with Ahmad, right, in the speakers room, and we are noticing that a lot of the so-called free delivery, right, either in e-commerce or food aggregator seems to be diminishing, right? And as a result, right, a lot of people prefer to just go out to the malls, go out to the offices, gas station, whatsoever, to actually get their cup of coffee, get their, I don't know, he was talking about eye serum, right? Rama is talking about, sunglasses, right? So all of those that was initially purchased in 2020 and 2021 through online, right now people are actually going to the store and purchase, and that is why, despite the headwinds as mentioned, there's a tailwind as well in the change in consumption behavior.
Okay, Rama, Saturdays, it's been growing quite aggressively. online and offline. I mean, in your business model, I mean, eyewear is something which is need-based. If you need a new pair of glasses, you got a prescription, you don't have a choice. And eyewear is also partly fashion because people like to have different eyewear to go with different occasions. So as you think about your business, are you seeing economic headwinds that you think in the short term will impact how you want to roll out the business?
I think for us, we stick with fundamental. So we started Saturday in 2016, and we've been bootstrapping for 4 years before we finalized our first round of investment. So for us, why we started Saturdays, because we see vision impairment is a big problem globally. I think that's like why we started Saturdays. If you take a look at World Health Organization, they put out a study that 8 billion population, 2.2 billion actually have vision impairment. And then out of that, 1 billion actually they don't realize they need glasses. And it's causing lost productivity of 400 billion US dollar. So it's very large. And then if you take a look, the number of population require eyewear will continue to increase. So there's a study as well that number of about 40% of the population globally will require glasses by 2030, and 50% by 2050. And the number even greater in Asia. I think the Economist put out a study last year by a person by the age of 20 years old. 80% of them actually require glasses in Asian countries like Korea, Hong Kong, Taiwan. I think Indonesia is kind of similar trend because a lot of people here spend time looking at the devices and they just don't go outdoors, so the eyes just don't develop. I think that's why we started this business. We're looking more like a long term. We want to help solving the vision problem in Indonesia because a pair of glasses can improve productivity by 30% and improve income in emerging country like Indonesia by 20%.
Ahmed, before I come to Jin, you've got a very successful portfolio of brands. You said 12 brands across categories. What have you been seeing over the last 2 or 3 years, and what do you expect to play out this year in terms of the economic headwinds? This is the last question I'm going to ask the founders on the headwinds before we talk about your brands and what you want to build and get Jin in on how he sees global perspective on this. But what have you seen and how are you changing your go-to-market?
Oh man, I can talk for 3 hours about this. Look, but the underlying here is that, okay, 3 minutes, I got it. I think like the economic headwinds is benefiting us as a local brands. Actually, the one that needs to be worried is the global brands. People will move from, buying an overpriced Starbucks for 50K into, 3 glasses of Kopi Kenangan for 18K each, right? Same with us as well. The difference, with the 5-7 years ago in Indonesia, but local brands, is that the quality of the products here for these local homegrown brands is now match the global brands, right? If you see, and not just that, guys, it's not just about the quality. It's about how they're marketing it, how they talk to the most relevant customers audience, because the local brands knows the Indonesian market better. And it's not just about that. It's about how creative way of doing things and stuff like that, right? So the way that I see, people will have a less buying powers, but they won't stop buying things. But instead, they find a more affordable alternative of the product at the same quality, which provided by the local brands. And the second reasons why I think the global brands needs to worry about these headwinds is that you see, right? Majority of these global brands products and revenues not coming from online. They're coming from GTs, MTs, and offline. You know this, Deepak. So meaning that they've actually reached all the customers across Indonesia already. On the reverse, right? A lot of local brands is the digital native brands, which means when they started, 80-90% of the revenue coming from online. And this online only reach certain areas in Indonesia with all these shipping subsidies coming from all the marketplaces. But what's happening right now is that with all this cutting of the subsidies of free shippings and stuff, they're forcing themselves to expand the customers' reaches into the offline, which means they will reach more and more new buyers. Then the growth will happen there. So you can imagine that, right? People has less buying powers. They want to find affordable, more affordable products. And there's the local products that has an amazing quality on par with the global brands, at the more attractive packaging, at the more attractive community-driven, approach. Then it's gonna be really something that very interesting for the local brands in the market and local consumers in the local retail industries. To go to your questions, Deepak, about what I've seen for the past 3 years, right? I'm a big believer of we go where the customers are, right? So we don't try so hard on going on the direct to consumers. We still exist on the platforms like Shopees, Tokopedias. We have our own direct channels. We go to the distributors and stuff like that. The way that I see it for the past 2-3 years, when the pandemic hit, we're a pandemic business. The business started in January 2020. 3 months later, the pandemic hit, right? Online was really slow, right? So we focus on optimizing our online channels and stuff. For the past 1 year, what happened is that we foresee this, people going back to the offline and, because again, all the marketplaces and e-commerce in Indonesia at least, they have an urge to cut the subsidies of shipping fee and everything, then the offline now back matters, right? So what we did for the past 1 year is that we are expanding our channels from online into a bit of offline as well, not only by creating our own stores. We do have our own stores, but also working with the distributors. Because for us, whatever the most capital efficient, to actually reach wider audience, that's what we do. Majority of our revenues is coming from health and beauty categories. Then that's also then resulting in the for us, we're quite happy with our 2022 performance. We're profitable on the group level. We're free cash flow positive. We're net income positive businesses. And for us, I think this is gonna be just a start, and for the next 3 years, it's gonna be even bigger for local brands.
I've got 2 or 3 points I took away from all the 3 founders. One is local brands for the local market. One is being omni-channel. But before we dive deeper onto brands, I want to get Jin's perspective. Goodwater's been around for about a decade, investing only in consumer technology companies around the world. 60% of your portfolio is outside the US. Yet you're the only partner who actually lives outside the US. So having that global perspective of investing in consumer globally, how does Indonesia fit within your playbook? And is the economic headwinds that Indonesia's facing today very different from the other markets? Is it the advantage or disadvantage? What's your lens, given you have a unique perspective?
Yeah. So there's a couple of themes here. I think there's 2 main themes that I think I'd mention. One is cheap capital is definitely over, right? And the second is, Rohit mentioned it earlier, which is you really got to think long term. And so because of that, I think we're extremely bullish in consumer tech. If you just look at, let's go to the first point first. Investors have always been focused on fundamentals, right? And so when there's cheap capital, it's not about how fast you can grow, 500% year over year. But when you look at the fundamentals is, can you actually keep those users, retain them, and actually have a lot of customer love where they continue to come back and engage with you, right? And so when you break that down into the actual metrics of the company, those are the metrics that investors are actually really focused on, right? And so I think having that discipline of constantly just always looking at consumer tech, that's been really fundamental to us, is always looking at those fundamental metrics that really drive consumer success. But with that said, I think when you look at the bright side, consumer tech has been probably in the past 2 decades the most value driver for investors, right? So if you look at the top 6 out of 7 companies in the US, or just in terms of pure equity market value, they're consumer tech companies, right? Whether it's the Google, Facebooks, et cetera. And so even in Asia, when we look at maybe the top 2 out of the 4 companies, you also have like Tencent, but they're all consumer tech companies, right? So we still think there's a lot of value because today where this digital disruption has happened is mainly in like digital advertising, where we're seeing Google and Facebook seeing like $3 trillion market caps. Yet there's these markets that are still available, which is education, healthcare, fintech, entertainment, social, real estate, transportation that has yet to be disrupted. And I think that's where we're seeing a lot of opportunities in Asia, because these are areas where infrastructure still need to be built in order to see the long-term returns. And so I think these are some of the areas that we're very directly deep diving into these days.
I think the message is, despite the headwinds in the short term, Indonesia continues to be a very attractive sort of domestic-driven consumption market. I mean, at DSG, we've been investing in consumer for 20 years, including my prior fund, starting in India. And I think what I want to spend some time on is, because Joji told me that a large number of people in the audience are first-time Indonesian founders building consumer brands. I want to ask the three founders, when you started your businesses, whether it's Kopi or Hype or Saturdays, you guys were taking on local incumbents and global brands. What gave you the conviction that Indonesians today are very happy and proudly willing to buy a made in Indonesia brand with a made in Indonesia story over and above something which was, even 10 years ago, perception being if it's made in Korea it's better, or it's made in Singapore it's better? What gave you that comfort, and how is that going to change, if at all, going forward? Why don't we start with Edward?
So I think in terms of local brand, right? If we think about it, most global brands are primarily came from the US, right? In my case, it will be Starbucks, right? In which the primary product is usually something along the line of latte, cappuccino, americano, right? So the first benefit of being a local brand is that you have that localization edge, right? Because not everyone drinks latte and cappuccino. In fact, for us, latte and cappuccino and americano is only 10% of our sales. Most of our sales comes from the localized recipe that Indonesian likes. And actually the same with Malaysia as well. When we launched in Malaysia, we were able to sell 1,400 cups in the second day alone, right? And most of the sales actually did not come from latte or cappuccino. Most of them comes from this recipe that we create and craft for the Malaysian that is suitable to their palate, right? So in terms of something that you consume, taste is very localized. Whatever works in the US might not work in Indonesia. Or for example, we were just discussing in the speaker room, right? Tea for most Indonesian is not exactly your Earl Grey, chamomile, or English breakfast tea, but then it's actually more like a boba, right? If you think about it, Tea Life has 800 stores in Malaysia, a population of 30 million, because that is tea to most, Southeast Asian population. It is another localization that we can do or offer to customer, right? So or in the case of fried chicken, we have a fried chicken brand as well. Our top seller is not exactly your typical fried chicken, but it's fried chicken with sambal. For those of you who don't know, sambal is Indonesian loves to eat chili. It's basically chili with fried chicken, right? So that localization that
localization is very important. Do you think the Indonesian consumer today, the 25-year-old, the 15-year-old, is very proud of buying Indonesian? Is there a change in mindset now that we want to buy something and support a local brand? All things being equal, would you rather support a local brand, or would you support a imported brand?
So in December, I actually just had like a very good session with Group M and Kantar, right? And one of the research that we saw from Kantar, it seems like being pride of Indonesia really touched into the heart of consumer, right? In fact, when we did our own internal FGD, when we asked our customer to describe Kopi Kenangan, many of them actually describe it as pride of Indonesia, for example, right? Because they take pride that a local brand can go international. A local brand can open 850 stores in 5 years, right? So a lot of those are actually a source of pride to them, and they would prefer to support the local brands. And I think our president, Pak Jokowi, has been echoing that as well, right? By a local brand, by a local brand. So all those, KOL or key opinion leaders, right, have been echoing this, buy local, support Indonesian brand. has really been resonating into the hearts and minds of the consumer.
So, okay, I mean, in coffee and food, there's a lot of localized tastes and preferences. Ahmed, let me ask you, across your brands, how have you seen the Indonesian consumer sort of react to the brands you're bringing on board, which are very Indonesian-centric? And how do you see that playing out going forward as you look at acquiring new brands? How do you think about the brands you want to acquire at height fast, given the diversity of consumers' demands?
So I think, at this point, the milestone in the faces of the consumers in Indonesia, they, from 3-4 years ago, they started to believe. Because if you see 7 years ago, as I mentioned, 7-8 years ago, when we're talking, our biggest business coming from health and beauties, so cosmetics, skincare and everything, people has doubt on emerging local brands, right? But at this time, as I mentioned, so the quality of the brands is there. So the fundamentals of the business, which is products, how it's useful and how it's actually good. They have 4.9 ratings out of 5. People like it. That's the fundamentals of things, right? So that's good. And when people try it, it's useful and it's affordable, then people talk to their friends and their friends buy it. So that's number one things, right? But number two is how the local brand understands the consumers, guys. I'll give you this one, right? So if you see the average of, so we have these terms, marketing to net revenue ratios, right? So if you looking at Lululemons, Glossier's, Drunken Elephants, everyone's in the US, I think the average of this marketing to net revenue ratio, will be around 25% to 30%, right? In Indonesia, we've seen, I've talked for the past 3 years, I've talked to over 3,000 brands in Indonesia, and the average of marketing to net revenue ratio of them is around 9 to 10%, right? Why? Because the way that they do marketing is completely different with the way that global brands or any other brands out there doing their marketings is more community driven. They build the communities, and these communities has the loyal communities. They build amazingly on followers of TikTok, of Instagrams, and they're very loyal to the brands. And this is then benefiting the brands a lot, because then when you increase the LTV, when you try to increase the lifetime value of the consumers, you go from skincare and you vertically expand it into decorative makeups and everything. When people trust the brands, you have a loyal communities, then people will always buy it, right? So the way that I say it is that one is that people start to trust and they're not disappointed with the quality of the product, because that's what matters, They start to actually really make a comparisons with all the global brands, and turns out the quality is good. So that trust has been acquired. Then they see a relevancy of themselves with the brands. And that's even make them, more feel okay, these brands is really talking to me, not just to some mass random customers, on the TVs or billboards and stuff. Then that's what really driving more and more penetrations to the globals. And as I mentioned to you, right, Deepak, I feel it's same with everything else. In Indonesia, you have early adopters. So early adopters in Indonesia is those in tier 1 cities. Most of the local brands is, they started from big cities in Indonesia, right? So Jakarta, Bandung, Surabaya, Medan, and stuff. So access to these guys is much easier. But what happens today, as these local brands going to these GTMTs, general trade, modern trade across Indonesia, they now exist on these ruko, small shops across tier 2, tier 3 cities in Indonesia. Those guys who only have access to, global brands or so because they have a massive distributions, now they have access to the local brands. Now, it's becoming a domino effect, and this is just the beginning, I feel like.
Thank you. Rama, let me ask you, when you started Saturdays, you had the mom and pop optician, Opitec, as you walk around, you had some of the regional brands. What was your insight when you started Saturday? Why did you call it Saturday? Because if you look at the brand, it could be from anywhere else. It's very cosmopolitan. So what has given you the ingredients to be as successful as you have in the early days of your journey?
I think one of the main reasons that we started Saturdays because of my personal experience. Actually, I grew up in Indonesia. I've been wearing glasses all my life. And then when I never buy glasses at the mall because expensive. In the past, I always buy glasses at the mom and pops, which is like cheaper option, but not good quality, not good design. It just break all the time. I think it's something that really triggered me. Like, okay, I need to do something about it, right? So basically, like we're the pioneer for the D2C eyewear in Indonesia. So we basically the three main problem that I see in Indonesia glasses. One is expensive. Secondly, the look and fit it's not suitable for the Asian face because a lot of glasses sold here, they are reseller of Luxottica. It's actually meant for the Western faces, not for the Asian faces. Number three, the experience is kind of boring. So that's why me and my co-founder Andrew Kandola, we decided to do something about it. So what we did, we designed and manufactured the glasses in-house. So we cut all the middlemen, so we can provide good quality at much more affordable pricing to the customers. And then so we can decide any eye shape, also look and good for the Asian customers, right? So that's why we're able to collaborate with some of the well-known brands, just like Marvel, that kind of thing. Secondly, we also localize the concept. We use omnichannel experience, so we sell like online and also offline. For the lifestyle stores, we have cafe setting because Indonesian they like to hang out. So basically, for every customers that buy eyewear, we give them like free coffee as complimentary. And then next time when they come to our store, they can enjoy buy one get one drinks because the name Saturdays itself. At least for me, this is my favorite day of the week. So I can be myself, I can do my hobby. People basically Netflix all the time. People get married on Saturdays as well, right? We basically want to create a brand that people can associate to be like, oh, this is a cool brand because the perception to shop glasses in the past is kind of boring. So that's why we want to start with the name, make it like a cool name.
Okay, cool name, making it easy. I've got a 5-minute warning, so we have 5 minutes before the panel ends. If anyone has questions, I think they put up a QR code earlier on. My eyesight is really bad. I need to get new Saturdays glasses, which they promised me will come very soon. So I'm going to switch glasses so I can read the questions. Question number 1. What is the role of buy now, pay later and fintech lending in driving consumption? Will the impact of stricter BNPL regulations will it have any impact on consumption? I guess there's no BNPL in Kopi Kemangan, or is there?
Not really.
No, I hope not. So let me ask Rama, anything?
Not much too. Yeah, not much.
Ahmed?
Some customers utilizing the third-party partners, like, we have a lot of BNPL partners like Shopee Pay Laters and stuff, but I don't expect a lot.
I mean, from Sequoia's perspective, or Goodwater's perspective, have you guys seen BNPL driving sort of a material uptake in consumer businesses? I know I've seen it in some markets, but in Indonesia or Southeast Asia?
I think it depends upon categories, but definitely I would say for most of the day-to-day consumption, I don't think BNPL has been a big driver of demand, but for products and services which are, say, a few $100 to a few $1,000 in education, in consumer durables, etc., it helps people bridge the cash flow gap. But I don't see BNPL sort of impacting any industries very materially.
Okay, and Jin?
Yeah, so BNPL in other markets is very prevalent, right? And so the promise here is that we're going to increase your merchant basket size by 20 to 30%. There's the good and the bad, I think, and I think that's why the question here is actually important because regulation on BNPL is probably good. The downsides of BNPL is consumers can get BNPLs from multiple BNPL lenders. And so the issue is then these lenders don't know if you already have BNPL and how that impacts your overall cash flow. And so I think in terms of consumer protection, that's definitely something that's needed and probably the right direction.
Okay, thank you. Question number 2, how available and effective is debt funding, such as revenue-based financing, available for consumer brands? So if you think of Saturdays and Ahmed for your brands, I think Kopi Kemangan is less relevant. I mean, how important is it available in Indonesia? Can you find sources of funding that can fund your working capital or other similar debt-related products to supplement the equity you raise as you grow your businesses? Anyone who's, have any of you raised any debt funding?
I think for us, it makes sense for us, our type of business, because if we use effectively and in a timely manner, it really helps us here. We actually use revenue-based financing during pandemic.
Okay.
It really helped us because we can time effectively when we think that the revenue will grow, right? So it really helped with extending our runway. I think also for the debt financing also quite attractive for us as well, because we basically more like a capex heavy, like for inventory, for working capital, that kind of thing. I think something that we looking at it actually, something quite interesting for our type of business.
And Ahmed, have you had?
Yeah, no, I think debt funding is always useful for retailers. It's helping on the cash flow side as well. And I mean, given the fact that the math works, right? Health and beauty category, as example, most of the brands is doing what 60-65% gross margin businesses.
Okay.
So if you put is the interest cost there and stuff, it still makes sense, and it helps you on the cash flow as well as the business grow, right? So I think it's always useful, and the way that we see it is that if the math works, and then it's always good.
Thank you. We are exactly on time. I want to say thank you to all the panelists. I hope Rohit, Jin, Edward, Ahmed, and Rama were able to give you some perspective on the exciting opportunity in consumption businesses in Indonesia and how the short-term economic headwinds are something we have to deal with. But if you just look out at 2030, 135 million expected consuming Indonesians, GDP per capita growing at 9% per year for the next decade. It's a very difficult sort of segment to ignore. And that's why founders are starting consumption businesses, and that's why investors like Goodwater, Sequoia, and DSG are very excited to be in Indonesia, backing Indonesian founders, building Indonesian brands. Thank you very much.
Thank you.
Thank you so much to Deepak as well as our esteemed panelists. That was a great discussion on the consumption theme, holding strong despite economic headwinds. Thank you so much, gentlemen. And now, coming up later at 1:30 p.m., you're not going to want to miss this. We are going to be having our Minister of Tourism and Creative Economy Indonesia, Sandiaga Salahuddin Uno, is going to be here at 1:30 for a keynote address as well as a fireside chat about leveraging the soft power of tourism and creative economy to generate alpha. That'll be happening at 1:30 p.m. A few more announcements before we send you off for the lunch break. We also have our lovely Deal Street booth that you can visit during the lunch break. Deal Street Asia Summit is going to be bigger and better next year, or this year rather. Our next Asia PEVC Summit 2023 is going to be happening across 3 days on 11th to 13th September this year. Attendees can enjoy a special offer for just $599. You can find out more at the DSA website and use the code JKT23SPE to enjoy that $599 offer. Now, the Indonesia PEVC Summit 2024 next year is already planned for 25th of January. Save big with our special offer at $199. You can use the code as well, JKT23SPE. Once again, the code is JKT23SPE. Now, we also have special discounts for our premium news products as well. as our Data Vantage offerings take advantage of 50% off on our plans today. Use the code IDPEVC2023. If you want to find out more, please visit the Deal Street Asia booth for more information about our various products. Quick shout out to our sponsors. Thank you so much to our wonderful sponsors booths. Check out the booths. We have Red Hill. Check out Red Hill's booths to plan your next public relations campaign. We also have Markham Asia. Make sure to stop by the Markham LLP table to find out about their audit and advisory services. Both of these sponsors booths are at the ballroom foyer. Now today, when you use social media, don't forget to hashtag Indonesia PEVC Summit. Once again, hashtag Indonesia PEVC Summit when you post on LinkedIn, Facebook, Twitter, Instagram. You can also tag Deal Street Asia at Deal Street Asia. You should be able to find the tags on your name tags, actually. Fantastic. Big shout out to our sponsors. Once again, thank you so much to our silver sponsor, Salt Ventures, our lounge sponsor, USS Networks, our luncheon sponsor, HKX, our networking sponsor, Red Hill, our hospitality sponsor, Art Hotel Group, our supporting sponsors, Maybank, Asia Partners, Markham Asia, and our media partners, Nikkei Asia, Qatar Data, and the Business Lounge Journal Indonesia. Now, throughout all of today, the Belgravia East Room is going to be open on level 2 for all-day lounge, sponsored once again by Salt Ventures and USS Networks. Be back here at 1:30 p.m. Once again, for those of you who didn't catch it just now, at 1:30 we're going to be having the Minister of Tourism and Creative Economy, Indonesia, Sandiaga Salahuddin Uno, will be joining us at 1:30. See us here at 1:30 p.m.